Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from the Singapore Fintech Festival. And joining us for this segment, we have Pierre Fel. He is the partner at Salmon Partners. We're going to discuss Insurtech and how that is impacting players within the insurance space. Pierre, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
Let's talk about the current state of play with traditional insurance companies, Insurtech, and some of the barriers to entry.
Yeah, well, it's interesting. We've spent the last couple of months talking around 30 leaders in Insurtech and insurance across Europe and Asia to get their view exactly on the state of play in the industry. So the good news, insurance today is around a $5 trillion industry, and there's still an uninsured gap of insurance around $20 trillion. So there's plenty of room to play for the Insurtechs to come in. That said, today Insurtechs have a little tiny slice of the pie. And there's a big push for them now to get more market share and to own some of their footprint in the industry. Today, the biggest barriers to entry are still the same. It's a capital-intensive industry. It's still highly regulated and incredibly complex. Now, Insurtechs are changing a lot. The technology is scaling up. It's improving. It's modernizing. But still they face challenges. So in the current climate, we're seeing the PEs, the VCs, and the investment community really putting a bit of a break in terms of seed and Series A. So for the old bootstrap Insurtech, it's a lot harder today to take off and to make a difference. And then couple that, if you want to have a regional play, which if you want to be a fully fledged digital insurer today, you need licenses. And getting licenses in Indonesia, in Vietnam, and Thailand is no easy feat, if not impossible. So the only way to market is through acquisition. Right. So the good news is there are some serious PEs that understand this, but a lot of PEs either really understand tech or really understand insurance. But to understand both and understand the innovation behind some of those Insurtechs, if you really know insurance, is quite difficult and often puts them off.
Let's talk about the war on talent, because you know how, I mean, regardless if it's Insurtech, every vertical is competing for the same technology talent.
Absolutely. So there's a dearth of talent in Southeast Asia, particularly tech talent, and that goes across fintech, particularly insurance. Now, if you put it in the context of Insurtechs and insurance, they have to compete against the wider fintech. So insurance still has the image of insurance, which is changing, and insurance is viewed as a more modern industry, but still attracting talent is a lot harder because we're competing with the Web 3.0 space, crypto and blockchain, which is a lot more attractive. That said, all the candidates that we're looking at as headhunters is now global. We're bringing talent in globally because we can't find it on the ground. And that is also posing a challenge, uprooting families. But we have some clients who are much more flexible and offer hybrid and let these leaders sit in different locations and the hybrid work. So it's possible, but it's a lot harder than it's ever been today, and it's a fierce competition.
Okay, let's put it like this. What's working and who is winning?
So today, what we're seeing from the investor community is they want Insurtechs to drive profit. They don't want Insurtechs to just set up, run at a loss to acquire customers. They want profit from day one. They want a full stack build from day one. So those are winning are those who are able to get clear metrics in place and clear deliverables for their investors, or able to get large amounts of fundings from day one and go and build.
But you could argue that for any startup, right? Everyone's focused on profitability, not perceived valuations a few years out. They want to see profitability.
Yeah, I think in the insurance industry, it hasn't been the case. Historically, there's been a lot more leeway to allow this space to emerge, whereas today, no, not at all.
So the ones that are showing profitability are the ones that are winning at the end of the day.
They're winning, and look, there's a lot more complexity in the market. So where we see some of the Insurtechs playing and where there's a lot of success and a lot of demand in terms of talent is around the topic of digital distribution partnerships. So being able to partner with online e-commerce, with online travel, with wallets, with payments, and be able to create really slick embedded insurance businesses and products into those insurance. So if you buy a plane ticket, you buy your insurance with a click of a button without thinking twice. But to be able to do that seamlessly and to find talent that has access and the relationships and the know-how to create these deals is really scarce.
Right. Well, I guess that's the better question to ask. What are the problems that Insurtech is looking to solve?
It's really modernizing a traditional industry and making a seamless consumer experience. Very few people want to download an app and buy insurance and have a dedicated app. They want to be part of a super app or an app ecosystem, and insurance is part of a seamless purchase. You buy a watch, it's insured.
Right.
So it's creating that seamless customer experience. Since in a post-COVID world now, there is a much larger adoption of insurance, particularly in health and travel in emerging markets than there's ever been. But customers are clearly saying they want a better experience.
Right. All right. Pierre, appreciate the insight.
Really?
Thanks for joining us
Thanks.
on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.